Welcome, investors. We're delving into 8 strategic assets to thrive amidst today's inflation. Navigating economic uncertainty demands savvy investment choices. Stay tuned for invaluable insights. 1. Global diversification. Global diversification is an investment strategy that involves spreading one's investment portfolio across different regions and countries worldwide. The aim is to reduce risk and enhance potential returns by avoiding over-reliance on the performance of a single market or economy. By diversifying globally, investors can take advantage of varying economic cycles, currency movements, and market conditions. This strategy is founded on the principle that not all markets move in tandem. When one market faces challenges, others may be flourishing. Global diversification can involve investing in international stocks, bonds, real estate, and other assets. It provides a broader exposure to different industries, sectors, and geopolitical influences, helping to create a more resilient portfolio that can better withstand regional economic downturns or uncertainties, ultimately contributing to a more balanced and robust investment approach. 2. Foreign currencies and international investments. Diversifying one's investment portfolio through foreign currencies and international investments involves allocating assets beyond the confines of domestic markets. This strategic approach seeks to mitigate risk by spreading investments across various countries and currencies. Foreign currency investments may encompass holding currencies directly or investing in currency-related financial instruments, such as forex contracts or currency-focused funds. International investments span a broad spectrum, including stocks, bonds, and other assets from different global markets. This diversification allows investors to tap into opportunities arising from economic developments, industry trends, and market dynamics in diverse regions. It's crucial to note that while international exposure can enhance potential returns, it also introduces currency risk, geopolitical uncertainties, and market volatility. Thorough research, ongoing monitoring of global economic conditions, and a nuanced understanding of international markets are essential for investors seeking to navigate and capitalize on the opportunities and challenges associated with foreign currency and international investments. 3. Gold and silver bullion. Gold and silver bullion, as physical precious metals, serve as tangible assets, acting as a traditional store of value and a hedge against inflation. Investors turn to these metals for wealth preservation and portfolio diversification due to their historical stability and low correlation with other assets. Gold and silver's perceived role as safe haven assets makes them attractive during economic uncertainties and market volatility. Limited supply dynamics, coupled with industrial demand for silver, contribute to their intrinsic value. Physical ownership provides investors with a tangible and liquid asset, easily traded in global markets. While gold and silver can be valuable components of a diversified portfolio, it's essential for investors to consider individual goals, time horizons, and risk tolerance when incorporating these precious metals into their investment strategy. 4. Cryptocurrencies. Cryptocurrencies, like Bitcoin and Ethereum, are digital assets operating on decentralized blockchain technology. As pioneers, they introduce a novel form of decentralized currency, reducing reliance on central authorities. Bitcoin, in particular, serves as a digital store of value. Investors often diversify with alternative cryptocurrencies, altcoins, to explore varied use cases. However, the cryptocurrency market is known for its volatility, driven by speculation and market dynamics. While blockchain ensures transaction security, the space is not without risks, including hacking and fraud. The advent of smart contracts, especially on platforms like Ethereum, expands blockchain utility. Cryptocurrency markets face evolving global regulations, impacting adoption and valuation. Despite challenges, advocates believe in the long-term potential of cryptocurrencies, envisioning them as transformative forces in finance, offering inclusivity and borderless transactions. Despite the transformative potential, the cryptocurrency market's inherent volatility cannot be overlooked. Price fluctuations driven by speculation, market sentiment, and external factors contribute to both opportunities and risks for investors. 5. Treasury Inflation-Protected Securities, TIPS. Treasury Inflation-Protected Securities, TIPS, are U.S. Treasury bonds specifically designed to shield investors from inflation. Indexed to the Consumer Price Index (CPI). TPE's principal and interest payments adjust with changes in inflation, safeguarding investors from declining purchasing power. The adjusted principal determines interest payments, providing a consistent income stream with real, inflation-adjusted returns. TPEs also offer deflation protection, ensuring investors receive at least the original face value at maturity in deflationary scenarios. With maturities ranging from 5 to 30 years, TPEs cater to various investment horizons. While they provide liquidity and accessibility in the secondary market, investors should weigh the trade-off between inflation protection and potentially lower nominal yields. 6. Blue chip stocks. Blue chip stocks, representing shares in well-established companies renowned for their stability and reliability, stand as pillars in investment portfolios. These industry leaders not only boast strong financials, with robust balance sheets and consistent cash flow, but also often reward investors with regular dividends, ensuring a reliable income stream. Globally recognized and frequently part of major indices, blue chip stocks offer not only lower volatility, but also the potential for sustained long-term capital appreciation. Investors commonly integrate these stocks into their portfolios for diversification, strategically balancing riskier investments with the dependability of established companies. Thorough research becomes paramount in aligning blue chip holdings with individual financial goals and risk tolerance, forming the cornerstone for a well-rounded investment strategy that weathers various market conditions and stands the test of time. 7. Commodities. Commodities constitute a diverse category of tangible assets, ranging from energy resources like oil and natural gas to precious metals, such as gold and silver, as well as agricultural products like wheat and soybeans. Traded on specialized exchanges, commodities play a vital role in global markets. Their prices influenced by factors like supply and demand dynamics, geopolitical events, and weather conditions. Investors often turn to commodities for diversification benefits, seeking to hedge against inflation and capitalize on their cyclical nature, with certain commodities thriving during economic expansions. The inherent volatility of commodity markets requires careful risk management, and investors can gain exposure through futures contracts or commodity-focused exchange-traded funds. 8. High-yield bonds. High-yield bonds, or junk bonds, are fixed-income securities issued by companies with credit ratings below investment grade. Offering higher yields to compensate for increased risk, investors are attracted to the potential for greater returns. However, this higher return comes with elevated default risk, as issuers are often financially challenged or possess speculative business models. High-yield bonds are economically sensitive, their performance linked to broader economic conditions. Income generation is a primary allure, especially in low-interest rate environments. While providing diversification benefits in a portfolio, the risk of defaults underscores the importance of thorough due diligence. Investing in high-yield bonds requires a balanced approach, weighing the potential for higher income against the inherent risks associated with lower credit quality. If you enjoyed this discussion, don't forget to give us a thumbs up, subscribe to our channel for more financial wisdom, and hit the notification bell to stay informed.